Hi guys, welcome to day 19 of the market mindset. And today I'll be teaching you how you can analyze the balance sheet of a company in screeners.in. As you can see on the screen that we are on the page of Reliance Industries, and when I click on the balance sheet, I'll be redirected towards the balance sheet section of Reliance Industries. Here the balance sheet is divided into two categories, that is liabilities and the assets. First, we'll start with the liabilities section. In liabilities, the first particular is equity capital. Equity capital basically represents the funds raised by the company through the shares. The ideal trend of equity capital should be either stable or it should be growing at a very slow pace. In case of Reliance Industries, in the past 2-3 years, the equity capital has been stable. If the equity capital is growing at a rapid pace, then it says that the promoters or the owners of the company are diluting their stake, which is not a very good sign. Next comes the reserves. Reserves basically refers to the leftover net profit that the company has retained. The trend of reserves should be steadily growing. As you can see, that Reliance Industries from March 2021 has been constantly growing their reserves, which is a good sign. Next comes the borrowings. Borrowings basically refers to the loans taken by Reliance Industries. When you click on borrowings, it is further bifurcated into long-term borrowings, short-term borrowings, lease liabilities, and other borrowings. Long-term borrowings are basically the loans taken by a company for more than 1 year. It is used to finance the long-term needs like purchasing of fixed assets, etc. As you can see, the long-term borrowings of Reliance Industries has been constantly growing from March 2021, which shows that Reliance Industries is heavily buying new assets. Short-term borrowings. Short-term borrowings are basically loans taken by Reliance Industries which are payable within 1 year. These loans are taken to carry out the day-to-day operations of the company and to hedge against any unexpected expenses. As you can see the short-term borrowing trend from March 2021 to 2022, it was reducing. From March 2022 to 23, it had gradually increased, but in March 2024, it has decreased, which says that Reliance Industries is trying to control its short-term borrowings, which is a good sign. Lease liability basically refers to the payments of any long-term asset. In this case, it can be a building, a plant, or any machinery. Its trend should be manageable relative to the company's profit and sales growth. Next comes the other borrowings. Other borrowings is basically the loans taken apart from traditional methods like banks, or you can say the miscellaneous loans taken by Reliance Industries. Next comes the other liabilities. Other liabilities basically are the obligations that do not fit into the borrowings section. When you click on other liabilities, it is further bifurcated into three parts, that is non-controlling interest, trade payables, and other liability options or say other liability items. First is the non-controlling interest. So non-controlling interest basically refers to the portion of a company's ownership that belongs to minority shareholders or other investors when the majority of the company is owned by a larger parent company. To tell you in simple words, let's take the example of Reliance Industries and its subsidiary Reliance Retail. So, Reliance Industries owns 85% of the Reliance Retail business, whereas the remaining 15% is owned by the non-controlling interest, or I can say the minority shareholders. Next comes the trade payables. Trade payables basically refers to the money that the company owes to the suppliers, that is, they have purchased the goods on credit. Trade payables should always grow hand in hand with the revenues of the company. Next is the other liability items. Other liability items basically include provision for expenses or miscellaneous obligations. The other liability items should always have a stable trend. Now, if you add up all the equity capital, reserves, borrowings, and other liabilities, you get the total liabilities. And for Reliance Industries in 2024 March, it is 100. Now let's talk about the assets section. Asset section includes fixed assets, capital work in progress or CWIP, investments and other assets. First, we'll start with fixed assets. Fixed assets are basically those assets purchased by a company for long-term uses. When you click on fixed assets, you'll get a further bifurcation of land, building, plant and machinery, ship vessels, equipments, furnitures, and so on. So let us start with the land. The name land speaks for itself, so I don't need to explain you much about it. But the ideal trend of the lands should be increasing. It shows that the company is acquiring more and more land for expansion of its business. In Reliance Industries' case, the land has been constantly increasing from March 2020, and in March 2024 it has increased to 87,000 crore rupees. Next comes the buildings. So basically buildings also, name speaks for itself. And the ideal trend for buildings should be increasing as it reflects investment in infrastructure and facilities. As you can see, from March 2020, the buildings amount for Reliance Industry has been constantly increasing, and in March 2024, it has come to 82,000 crore rupees. Plant and machineries are basically the assets used for capacity expansion, or you can say to increase the production capacity. The ideal trend for plant and machinery should be increasing, because if the plant and machinery are more, then company can produce more products. See, the Reliance plant and machinery from March 2020 to March 2024, it has been at the highest level in 2024 to 579,000 crore rupees. Next is ship vessels. Ship vessels is included in Reliance Industries fixed assets because they own the fixed asset of ship vessels because they export their oils. So, if the ship vessels of Reliance Industries are increasing, it shows that Reliance Industries wants to export more and more oil. That is a very good sign for the company. So, equipments basically shows the investment in tools and machineries. It should increase alongside business expansion. As you can see, from March 2022, the equipment for Reliance Industries has started to grow from 32,000 crore rupees to 59,000 crore rupees in March 2024. Furniture and fittings. It is basically self-explanatory. So the ideal growth trend is it should be tied to office and store expansion. So like if Reliance has getting more offices, then the furniture and fittings will also increase simultaneously. Next is the vehicles. Vehicles pretty much self-explanatory. The ideal trend should remain stable, and if the trend for vehicles is increasing, then it should be in line with the operational needs of the company. Next comes the intangible assets. Intangible assets basically refers to patents, goodwills, etc. If the intangible assets of any company is rising, then it shows that the company is investing in them for long-term benefits. Now comes the other fixed assets. Other fixed assets are classified as the assets. Now comes the other fixed assets. Other fixed assets are basically the assets which are not classified. So if its trend is increasing, it is a pretty good sign. Next comes the gross block, which is very much important. Gross block is the sum of all the fixed assets that I have explained to you right now. So if the gross block of a company is increasing, it shows that the company is trying to expand its capacity, trying to put money in infrastructure development, which is a green flag in any company. Next comes the accumulated depreciation. So basically, in simple terms, a company's assets like machines, buildings, vehicles, when they are used, their value decreases over time. The decrease in the value is recorded as depreciation. Accumulated depreciation shows the total reduction in value of an asset since it was purchased. It is important because it helps to show how much of the asset's original value has been used over time. So, for Reliance Industries, the accumulated depreciation has been increasing because the company has been purchasing more and more asset, so the value will be reducing over time. Next comes the CWIP, or I can say capital work in progress. It basically refers to the money spent on assets that are still under construction or development. These are the assets the company is basically working on, but they haven't been completed and put into use yet. Increasing CWIP is normal when the company is investing in new projects like building, machinery, or infrastructure. It indicates the company is expanding and investing for future. However, a very high or rapidly increasing CWIP could indicate delays in completing project or insufficient use of capital, which is not ideal. So next is investments. Investments in balance sheet basically represents the money a company has spent to purchase financial assets that it expects to hold for a long period, such as shares of other companies, bonds, or real estate. These are not part of the company's core operations but are made to earn returns or for strategic reasons like owning a stake in the company. Increasing investments could indicate that the company is making smart moves to diversify its holdings and generate more income. However, if the investments are growing too fast without proper returns or strategic reasoning, it could suggest that the company is diverting too much of its capital away from its business operation. In case of Reliance Industries, we can see that the investments have been constantly reducing from March 2022 till March 2024, which is a good sign for the company. Next comes the other assets. Other assets in the balance sheet are miscellaneous assets that don't fit into the primary category of fixed asset. When you click on other assets, it is further bifurcated into inventories, trade receivables, cash equivalents, loans and advances, other asset items. So first, let's talk about the inventories. Inventories basically refers to the finished goods that the company has produced but they haven't sold yet. So, the ideal trend for any inventories is that it should be growing in line with the company's revenue. If the level of inventories is growing extensively, then it shows that the company is not able to generate sales. In case of Reliance Industries, the level of inventory has been growing constantly from the year 2022, which may be a concerning sign. Next comes the trade receivables. Trade receivables is basically the money owed to the company by its customers for goods or services that the company has sold on credit. Ideally, a company should maintain its receivables that grows proportionately with its sales. A sharp rise could indicate delays in customer payments. In case of Reliance Industries, there has been a sharp rise in the trade receivables from March 2021 to 2022, and after that we can see that the receivables have been growing steadily, which is a good sign. Next comes cash equivalence. Cash equivalence basically shows the liquidity of a company, how easily it can buy asset using cash. In case of Reliance Industries, the cash and cash equivalent trend has been growing constantly and in March 2024 it is 97,000 crore rupees, which means that if Reliance wants to buy an asset under 97,000 rupees using cash, it can buy it easily. Next comes loans and advances. Loans and advances basically means that the company is giving out loan to its subsidiaries or their suppliers. So, the trends of loans and advances should be at least steady and it should not be very high as it carries a default risk. Now, in case of Reliance Industries, in March 2024, the loans and advances amount was 2,517 crore rupees from 176 crore rupees in the previous year. This can be concerning depending upon whom the company has given loans to. Next is other asset items. Other asset items are basically miscellaneous assets like deferred tax assets, prepaid expenses, or non current investments. The ideal trend for other asset items depend on the business expansion and strategic investments. Next is the total asset, which is the sum or addition of all the particulars in the asset section, that is fixed assets with CWIP, investment and other assets. You will get the total assets